Hello everyone. Today we'll take up with question 5 and 6 of profit prior to incorporation, and you all must be able to try the things on your own. They are similar questions only. So whatever practice we have done so far will be sufficient to understand the concepts. So ideally first do the markings on your own, and then you play the video and verify whether your markings are correct or not. And then you solve the workings. Then again play the video, verify whether they are correct or not. And after that you make profit and loss statement and notes and verify whether you have done it correct or not. Look at the things. So first you pause the video and try the entire markings on your own. Then you play the video and verify whether your markings are correct or not. So pause the video and do the markings, everyone. Yes, I hope all of you should have done the markings by now. Look at the things and verify whether your markings are correct or not. Raj and Shri, who were working as partners, formed a limited company in the name of Raj Shri Limited on 1st August 2017. Now they formed the company on 1st August 2017, means 1st August is the date of incorporation. To take over their existing business with the consideration of being a sum of rupees 9,60,000. Now cancel this, it's a repetition, and to take over the existing business with the consideration being a sum of rupees 9,60,000. Cancel that, it's a repetition. Okay. Now to take over their existing business with the consideration being a sum of 9,60,000 and the condition that until the amount was discharged, interest will be payable at the rate of 6% per annum from April 1st, 2017, means that is the date of acquisition or year beginning. The amount was paid on 30th September 2017. So time ratio for this interest will be calculated from April to September only, which is the date of repayment. And you can count April, May, June, July, August, September. 30th September means 6 months interest is to be paid. So that would be 9,60,000 into 6% is the rate of interest into 6 divided by 12. Okay. So ideally that should come to 28,800. Do it in calculator. 9,60,000 into 6% into 6 divided by 12. That comes to 28,800. Anyway, the time ratio for interest on purchase consideration will be exclusively calculated till 30th September. The following was the profit and loss account of Rajshri Limited for the year ended on 31st March 2018. That is the date of year ending. Now in profit and loss statement, we'll do the markings in green letter with green letters will do it for profit and loss statement, and blue letters for the basis, time or sales or actual. Salaries and wages, employees benefit expenses, all of you verify whether your markings are correct or not. You must have that tried the things on your own. And time basis. Then debenture interest is finance cost, and actual basis, it will go entirely in post incorporation column. Debentures are issued by the company only after the company is being formed. Depreciation and amortization, time basis. Interest on purchase consideration, finance cost, and purchase consideration, so time basis, but up to the date of repayment, which is 30th September. We have seen it here, up to the date of repayment, which is 30th September. Selling commission, selling expense, sales basis. Director's fees, administrative expense, actual basis, entire amount will go in post incorporation period. Preliminary expenses written off, miscellaneous expenses, actual basis, entire amount will go in post incorporation period. Okay, director's fees and preliminary expenses are both the expenses of company only after company gets the certificate of incorporation. Interest on loan is again finance cost, and time basis. Now this time basis will not be till the date of repayment because this is not repaid only. This is loan and this is purchase consideration. Be careful. Purchase consideration is different from loan. Purchase consideration is different from loan. Okay. This is a normal loan borrowed by the old business maybe, and the interest is paid for full year April to March. So this will go on normal time basis from April to March, which we do in working note 1. Okay. I repeat it. Interest on purchase consideration is to be paid till the date of repayment. This interest on loan is a normal loan borrowed by the old business. So it will be from April to March and it will be allocated on normal time basis. That is as per the working note 1. Then provision for corporate tax will directly come in P&L statement and it will go on actual basis only in post incorporation period. Tax is paid. Corporate tax is paid by the joint stock company only after it gets the certificate of incorporation. So entire tax will go in post incorporation period on actual basis. Ignore this balance carried down. We have to find the net profit on our own. Gross profit brought down is revenue from operations and it will go on sales basis. You are required to prepare a statement appropriating the balance between post and pre-incorporation period, assuming that sales in post-incorporation period were double the same in pre-incorporation period. So that will help us in getting sales ratio. All of you must pause the video and make 3 workings on your own. Which 3 workings? Time ratio, sales ratio, and time ratio for interest on purchase consideration, that is up to the date of repayment. Pause the video and make the 3 workings on your own. Yes, all of you should have done the workings. All of you check your workings now whether you got it correct or not. So working note 1, time ratio. Now here we have to write the 3 dates in the chronological order. So if you see in the beginning, 1st April 2017 will be the earliest date. Then date of incorporation is 1st August 2017 and date of year ending is 31st March 2018. April, May, June, July pre-incorporation period is 4 months and August to March post-incorporation period is 8 months. 4 divided by 4 is 1, 8 divided by 4 is 2, 1 plus 2 is 3. So 1 by 3 and 2 by 3 is the time ratio. I hope everyone should have got it correct. Now sales ratio. As per the last paragraph, sales in post incorporation period is double of the same in pre-incorporation period. So we write first April, May, June, July, August, September, October, November, December, January, February, March. We don't change the pattern of workings, though it can be directly obtained, so that in exams and every time we remember the same concept only. Okay, so we keep the same pattern of workings of sales ratio in all the questions. 4 months, April, May, June, July is pre-incorporation period, and from 1st August onwards, August to March is post-incorporation period. Now they say sales in post-incorporation period is double of same in pre-incorporation period. So suppose the sales in pre-incorporation period is 1. In post it will be double, means it will be 2. So 1 is to 2, 1 by 3 and 2 by 3 is the sales ratio. Same as time ratio, 1 by 3 and 2 by 3. And third workings will be for interest on purchase consideration. Exclusive time ratio for interest on purchase consideration. Now here we'll write again the 3 dates, but the last date will be replaced with the date of repayment. So 1st April 2017 Then 1st August is the date of incorporation, and you can see here what is the date of repayment, 30th September 2017. See here, the amount was paid on 30th September 2017. So last date will come 30th September 2017. That is the date of repayment. So what will be the exclusive time ratio only for interest on purchase consideration? April to August, 4 months is pre-incorporation period, and August and September, only 2 months is post-incorporation period. 1st August to 30th September means August and September, 2 months. Both are divisible by 2. 4 divided by 2 is 2, 2 divided by 2 is 1. So 2 is to 1, 2 by 3 and 1 by 3 is the time ratio exclusively for interest on purchase consideration. Now all of you pause the video and make this format: statement of profit and loss of Messrs. Raj and Shri Limited for the year ended on 31st March 2018 with apportionment of profits between pre and post acquisition periods. You already know the formats and the items to be included in P&L statement also. So all of you pause the video and make this formats on your own entirely. Then we make with the notes. Yes, all of you should have done the formats by now. Now let's make the notes first. So all of you write down the first note will be revenue from operations. In that we will include gross profit. All of you see in the question, what is the amount of gross profit? 1,62,000. You all can find that in the credit side. So directly in last column, gross profit 1,62,000. Only one item is there. Second note, we don't have other incomes. Then we don't have CD, that is change in inventories, cost of materials consumed and direct purchases. Directly we have E, that is employees benefit expenses. In that we have salaries and wages. You all can see salaries and wages is 30,000. So directly in the last column, salaries and wages 30,000. Then after employees benefit expenses, C, D, E, F. So third note will be finance cost. Now in finance cost we have 3 items in this question, not 2, rather 3. You all can see here in finance cost we have debenture interest also, interest on purchase consideration also, and this finance cost includes interest on loan also. And all the 3 are on different basis. How come all the 3 on different basis? Debenture actual basis, interest on purchase consideration time basis but up to the date of repayment, and interest on loan again time basis but first workings time basis. So all the 3 are on different ratio. So here we'll have to make these columns. Which columns? You all will make the columns of basis, total, pre and post. In that first is debenture interest, basis actual. What is the amount of debenture interest? You all can see here 14,000. So total 14,000 and actual basis means entire 14,000 will go in post incorporation period. Then interest on purchase consideration time basis but up to the date of repayment, that means the third workings what we have done, that is 2:1. Up to the date of repayment means this 2:1 time ratio. Okay, so here time ratio in bracket 2:1, that is 2 by 3 and 1 by 3. What is the interest on purchase considerations amount? 28,800, which we also calculated here. 9,60,000 into 6% into 6 by 12, that also comes to 28,800. We have already cross verified that. So 28,800. Now 28,800 into 2 by 3 is 19,200 and 28,800 into 1 by 3 is 9,600. Then interest on loan. Now this will again go on time basis, but normal time basis, which is as per working note 1. That is 1:2 time ratio. You all can see in working note 1, what is the time ratio? 1:2. This time ratio will be taken into consideration for interest on loan. As I said to you, there is a normal loan which will be or which might have been borrowed by the old business. So from April to March, full you are paying the interest because date of repayment is not given. In purchase consideration, it is given 30th September. In case of loan, date is not given, means that loan is still pending till 31st March. Okay, the date of repayment is not given, means it is still pending till 31st March. What is the amount of interest on loan? 12,000. So 12,000 will go on normal time basis. Total 12,000. 12,000 into 1 by 3, 4,000. 12,000 into 2 by 3, 8,000. Now, total 14 plus 28, 42 plus 12, 54,800. Then 19,200 plus 4,000, 23,200. All of you must be able to do in calculators. 14,000 plus 9,600, 23,600 plus 800, 31,600. Okay. So this will be the total amount of finance cost which we will directly take in profit and loss statement. Then C, D, E, F, do. D again stands for, we have depreciation and amortization. Okay, depreciation and amortization. In that we have depreciation given in the question. You all can see here depreciation is 3,000 and it will go on time basis. Okay, so depreciation 3,000. Only one amount, so directly we can write in the last column. Now D, O. O stands for other expenses. For other expenses, we always have to make the columns of basis, total, pre, and post. Okay, we always have to make these columns for other expenses. First in other expenses is administrative expenses. All the items marked as A will be taken here. Which all items are marked as A, you all can see here. Only one item is there, director's fees, and that goes on actual basis 2,400. Okay, director's fees 2,400. Only one item. So director's fees basis actual, total 2,400. Entire amount on actual basis will go in post incorporation period. Only one amount is there, so that itself will be the total. Then we will have selling expenses. All the items marked as S. Again, only one item is marked as S in the question. Selling commission 27,000. That will go on sales ratio. Only one item is there. Selling commission. It will go on sales ratio, which is 1:2. 27,000. 27,000 into 1 by 3, 9,000. 27,000 into 2 by 3, 18,000. Again, only one amount is there, so that itself would be the total. And then we will have miscellaneous expenses. Now in miscellaneous expenses, M, what we have marked, again only one item is there, preliminary expenses written off. Actual basis, entire amount will go in post incorporation period 3,600. So again only one item is there in miscellaneous expenses. Preliminary expenses written off. Actual basis. So entire 3,600. Only one item, so that itself will be the total. Entire 3,600 will go in post incorporation period. I hope everyone is clear with this. Now final total of all total other expenses. 2,400 plus 27,000 plus 3,600, so 27, 29, 32, 33,000. In that 9,000 is pre and 18, 20, 23, 24,000 is post. Okay, so these are the total expenses, other expenses. All the notes are done. Now we'll put the amounts in the profit and loss statement, fill in the blanks. Revenue from operation will go on sales basis, that is 1:2. Note number 1. You all can see in note number 1 amount of gross profit is 1,62,000. Now 1,62,000 into 1 by 3. So 54,000, and 1,62,000 into 2 by 3, that is 1,08,000. I hope everyone is able to get this. Other incomes are not available, so NA, nil, nil, and nil. Now same would be the total: 1,62,000, 54,000, 1,08,000. Okay, same will be the total incomes, same as revenue from operations. Then cost of materials consumed not available, direct purchases not available, change in inventory is not available. Employees benefit will go on time basis, 1:2. Note number 2. Now time basis, note number 2, 30,000 you all can see is the amount. 30,000 into 1 by 3 is 10,000, and 30,000 into 2 by 3 is 20,000. Finance cost as per the note, because other different bases are there. So note number 3 directly will record 54,800 in total column. Then 23,200 in pre column, you all can see that, and 31,600 in post column. Okay, 23,200 in pre column and 31,600 in post column. Then depreciation time basis, that is 1:2. Note number 4, you all can see note number 4 amount is 3,000. So 3,000 into 1 by 3 is 1,000, and 3,000 into 2 by 3 is 2,000. Then other expenses again as per the note, note number 5. You all can see total is 33,000, pre 9,000, post 24,000. Okay, so 33,000, 9,000, 24,000. Now total expenses 30, 80, 1 lakh, 10, 14, 17, 20,000, 800. All of you do it in calculator. Pre 23, 33, 43,200. And post 20, 50, 70, 4, 7, 600. Okay, all of you must be able to do it in the calculator. Now, after total expenses, profit before tax, that is 1,62,000 minus 1,20,800. So 41,200. Then 54,000 minus 43,200, that is 10,800. And then 1,08,000 minus 77,600, that is 30,200. Okay, these are profit before tax. $30,400. Okay, 1,08,000 minus 77,600, so 30,400. Now taxes are given in the question, so that will go on actual basis, in entire amount will go in post incorporation period. Provision for corporate tax, we all can see 16,000 in the question, last second item. So entire 16,000. There is no note for this. We directly take it in the P&L statement. Note is not to be made. Entire 16,000 will go in post incorporation period. And then final amount of profit after tax, 41,200 minus 16,000, that is 25,200. 10,800 minus nil, that is 10,800. And 30,400 minus 16,000, that is 14,400. You all can cross check. 25,000 will be the total of 10,800 and 14,400. And for this 10,800, if asked in the question, the journal entry would be profit and loss statement account debit. Okay, profit prior to incorporation. Profit and loss statement account debit 10,800, and we will transfer it to capital reserve account 10,800. Now all of you will be doing in homework question number 6 entirely on your own, because it is ditto to ditto exactly similar to question number 5. So you all have to try question number 6 on your own. Main points I'll discuss, and you can pause the video and do the markings on your own, and you can verify whether you got it correct or not. So main points I'll discuss here. 31st August 2018 is the date of incorporation. 10 lakhs is the purchase consideration, again 6% interest, and from April to 30th September, so exactly same like previous question, 10 lakhs into 6%, and April to September 30th means 6 months. 6 divided by 12. 30,000 would be the interest amount. Okay. Then following was the details for the year ended. Make it 31st March 2018, and 1st April, make the correction in the date 2017. Okay, 1st April 2017, 30th September 2017, and 31st March 2018. Make these corrections. Now check your marking. Salaries and wages, employees benefit, and time ratio, exactly same like previous question. Directors fees, administrative expense, actual basis, post expense only. Entire amount will go in post incorporation period. Preliminary expenses, written off miscellaneous expense, and actual basis. Entire amount will go in post incorporation period. Interest on loan, finance cost, and normal time basis as per working note 1. It's interest on loan. Date of repayment is not given. Corporate tax will directly come in P&L statement, and it will go on actual basis in post incorporation period. Balance carried down, ignore it. Debenture interest, finance cost, and actual basis in post incorporation period. Depreciation and amortization, depreciation and time basis. Now interest on purchase consideration, make a correction, amount is 30,000. As we have calculated, amount is 30,000. So that 30,000 will go in finance cost and on time basis, but up to the date of repayment. Okay, that is 30th September. And selling commission, selling expense, and sales ratio. But that amount is 54,000. Okay, cross. Make a correction in that. Gross profit will be revenue from operations and in sales basis. You are required to prepare statement apportioning the balance between post and pre-incorporation period, assuming that sales in post-incorporation period were double the same in pre-incorporation period. So ditto to ditto, exactly same as the previous question. Because of this, sales ratio will become 1:2. So all of you must be able to solve entire question 6 completely on your own and submit it in the homework to the supervisor. Okay, that will be all in this lecture. Bye everyone. Take care. See you in the next lecture.